The market is closed. As of the final trading bell on Friday, June 19, 2026, MDA Space Limited closed at 59.11 Canadian dollars on the Toronto Stock Exchange, locking in a massive intraday surge of 6.29% on a trading volume that exceeded 2 million shares. This sudden upward movement represents a definitive breakout for the company, pushing it closer toward its previous 52-week high of $67.90 and well away from its low of $20.85. While many institutional funds were coasting into the weekend, smart market participants were aggressive buyers during the late afternoon session. The primary catalyst driving this massive capital influx is a massive corporate development that hit the wires, catching standard trend-following retail investors completely off guard. MDA Space announced an all-cash agreement to acquire United States-based Blue Canyon Technologies from defense giant RTX for $620 million. This acquisition gives them direct, unhindered access to the tightly guarded defense ecosystem of the United States, expanding their addressable pipeline by an estimated $3.5 billion and setting the stage for massive earnings acceleration by 2027. When retail traders look at a niche stock listed on the Toronto Stock Exchange, they generally expect a steady, slow-moving contractor tied to Canadian government budgets. The common narrative surrounding MDA Space is that it is a regional satellite component manufacturer best known for building robotic arms used in legacy space stations. Most self-directed retail accounts view it as a secondary asset rather than a primary growth vehicle. However, the true reality is that the management team is executing an aggressive, capital-efficient roll-up strategy designed to build a vertically integrated commercial satellite powerhouse capable of challenging multi-billion-dollar global aerospace corporations. They are no longer waiting on public grants. They are actively eating up market share in the commercial satellite market. While individual retail participants are busy scanning mainstream investing sites looking for speculative tech tickers, sophisticated institutional portfolios are quietly shifting funds into infrastructure providers like MDA Space because they recognize that the infrastructure layer is where predictable long-term profits accumulate. Consider how the broader investing public approaches the markets today. Someone looking for online investment options or generic investment help might scroll through a Fidelity mobile app or toggle options on a Robinhood app, hoping to catch short-term swings in consumer equities. Many open an individual brokerage account or set up automatic capital allocations using tools like Schwab Intelligent Portfolios to build an automated basket of domestic companies. But a true deep-dive market participant knows that real outperformance comes from identifying structural anomalies before they become obvious to mainstream financial commentators. The broader public frequently looks at tech giants, wondering if they should add more Apple stock, Nvidia stock, or Tesla stock to their retirement accounts. Meanwhile, the actual critical infrastructure that allows remote communications, modern defense systems, and commercial data transport to function remains highly constrained. MDA Space operates in that high barrier zone, and their latest corporate action proves they are ready to scale their global footprint far beyond their historical borders. Let's look closely at the trading mechanics that shaped the recent price movement leading into this weekend. The stock had been consolidating in the mid-$50 range for several weeks, showing signs of strong institutional accumulation as selling pressure dried up. When the Blue Canyon Technologies acquisition details went public, the order books on major trading networks experienced a significant spike in large block buy orders. Institutional accumulation models immediately triggered, pushing the stock from an opening print of $55.97 all the way to its daily high of $59.20 before settling at the $59.11 closing mark. This volume expansion is not retail speculation. It represents real institutional money managers realigning their long-term models. When a company uses its cash reserves or debt capacity to buy a high-margin business from a major defense prime contractor like Raytheon, it alters the underlying asset value. Analysts are already recalculating their price targets because this deal directly influences the price-to-earnings multiple, which currently sits at an elevated but justifiable level given the backlog expansion. If you are using platforms like Interactive Brokers Trading or tracking tickers via a SoFi active investing account, you have likely noticed that aerospace and defense stocks are receiving a structural bid across the globe. Macroeconomic realities have forced global governments to reevaluate their communication resilience and satellite infrastructure. MDA Space is leveraging this structural shift perfectly. Their recent contract wins demonstrate that they are becoming an essential partner for international defense projects, such as their selection by BAE Systems to support the United States Space Systems Command. This is why looking at standard indicators on standard investing sites often misses the bigger picture. When you rely solely on automated algorithms or basic robo-advisors, your capital is placed based on historical data rather than forward-looking corporate execution. Smart self-investing requires a clear understanding of how cross-border acquisitions bypass regulatory bottlenecks and open up new, highly lucrative government procurement pipelines. To understand the core business model that underpins this financial performance, we have to look at the three primary pillars that drive the company's regular revenue. First, their satellite systems division is responsible for manufacturing high-performance communication and observation payloads. Second, their space robotics division continues to maintain global dominance, securing their long-term position on major international orbital projects. Third, their geointelligence sector provides critical data stream solutions to commercial and government clients globally. By integrating Blue Canyon Technologies, MDA Space instantly acquires an active manufacturing footprint in the United States that specializes in small satellites and high-precision components. This eliminates the lengthy and complicated cross-border regulatory approval processes that often slow down Canadian firms trying to win defense contracts in Washington. It's a brilliant chess move that completely changes their addressable market size, yet many casual investors checking their Robinhood stock trading portfolios still view them as just a regional robotics company. Comment below how many shares of MDA Space you currently hold or if you are planning to add it to your portfolio soon. Hearing your perspective on these international satellite operators helps create a clearer picture of how individual retail capital is moving. When we evaluate the financial metrics of MDA Space, the balance sheet strength becomes a major point of discussion. The company has maintained an incredibly disciplined capital allocation framework, which is exactly why they were positioned to pull off an all-cash acquisition of this scale without severely diluting their existing shareholder base. Unlike speculative pre-revenue space tech startups that frequently pop up on popular trading applications, MDA Space generates actual operational cash flow. In their recent quarterly reports, they demonstrated a strong trajectory in adjusted EBITDA margins, supported by a multi-billion-dollar order backlog that extends out over the next several years. This predictable revenue visibility is a rare commodity in the modern market, making the stock an attractive defensive growth option for conservative portfolios managed through traditional channels like Fidelity Investments or Interactive Broker stock trading networks. While casual traders look for immediate gratification in highly volatile asset classes, patient capital focuses on backlog expansion and operational execution. The tension between what the market expects from this stock and the actual operational reality creates a fantastic setup for the upcoming quarters. The consensus narrative expects modest single-digit growth driven by predictable domestic contracts. The reality is that the commercial satellite landscape is growing rapidly, and the supply chain for small satellite components is severely constrained. By taking ownership of an established American supplier, MDA Space can accelerate its own internal product lines, such as their upcoming next-generation Earth observation constellation, while simultaneously capturing high-margin revenue from Blue Canyon's existing customer base. This creates a compounding effect on their earnings per share that the market has not fully priced into the equity. When you analyze the company through advanced platforms like the Interactive Brokers platform, you can see that short interest has remained relatively low, indicating that institutional players are hesitant to bet against this quiet accumulation phase. For individuals managing their own wealth through self-investing or utilizing specialized accounts like Fidelity IRAs, selecting individual stocks requires looking past everyday market noise. It's easy to get distracted by flashy tech headlines regarding Apple stock or the daily valuation swings of Tesla stock, but long-term wealth is built by finding companies with real competitive moats. MDA Space holds an undeniable technological moat in orbital robotics and radar technology that cannot be replicated overnight by well-funded startups. Their deep relationship with international space agencies and global defense organizations ensures that their revenue streams are insulated from standard consumer economic downturns. This structural insulation is why the asset stands out when compared to generic equities found inside a basic Fidelity brokerage or a standard robo-advisor portfolio. The company is actively moving from a specialized niche contractor to a global commercial aerospace Tier 1 supplier. Looking ahead, the upcoming catalyst for the stock will center around the seamless integration of their new American assets and the initial data commercialization from their proprietary satellite network scheduled for late 2026. If the management team can demonstrate immediate cost synergies and successfully cross-sell their advanced payload capabilities to United States defense buyers, the current price-to-earnings multiple will compress rapidly, making the stock look incredibly cheap on a forward basis. The primary risk factors to monitor include potential integration delays, regulatory compliance hurdles tied to sensitive defense technologies, and general execution risks associated with complex space hardware deployments. However, given the company's historical track record of flawless execution on critical global projects, the probability of successful integration remains remarkably high. Ultimately, the contrast between expectation and reality is what makes MDA Space one of the most compelling situations on the market today. The average investor looks at this asset through the lens of traditional, slow-moving industrial aerospace, missing the massive transformation taking place underneath the surface. The management team is quietly securing the critical infrastructure nodes of the future orbital economy, transforming a regional engineering firm into an international commercial powerhouse. For anyone deploying capital through online investing sites or managing an individual brokerage account on a Fidelity trading platform, keeping a close eye on this corporate transformation is essential. The recent daily price action and the massive block trades observed on the Toronto Stock Exchange are a clear indication that institutional money is waking up to the real value hidden within this Canadian gem. As the market digests the full scale of the Blue Canyon acquisition, the gap between investor expectation and operational reality will close, likely driving the valuation to new record heights. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.